Welcome back to Explain the Charts. Today, April 1st, 2025, we're analyzing EURUSD, combining news and technicals to form a trading strategy. We'll start with today's headlines, considering the latest economic data and, crucially, the impact of Trump's tariff policies. Remember from our search results, analysts are worried about stagflation due to these tariffs, and there are concerns Trump risks the Cubanization of the U.S. auto fleet. Also, the euro to US dollar pair is experiencing downside pressure due to tepid gains in the US dollar. Let's correlate that with the charts, keeping an eye on potential downside risks. Remember, 71% of retail client accounts lose money when trading CFDs with leverage. Let's take a look at the one-day chart. We see a recent downtrend, with today's candle showing further weakness. The price is currently hovering around 1.07372, a level that could act as immediate support. However, given the negative news sentiment surrounding Trump's tariffs and a generally stronger dollar, a break below this level could trigger further selling pressure. On the upside, immediate resistance lies around 1.0779. Failure to break above this level may indicate continued bearish momentum. Keep in mind the discussion about the possibility of euro to US dollar reaching parity in 2025, as highlighted in our search results. A long-term bearish scenario remains a valid possibility if current macroeconomic trends persist. Now, let's zoom into the one-hour chart for a more granular view of recent price action. The hourly chart shows choppy trading with no clear directional bias, which suggests market indecision. We can see a recent test of resistance around 1.0779 and a failure to break through. This corresponds to some of the recent posting activity. Looking closer, we can see prices ranging from 1.0785 to 1.0762 on the hourly, implying some near-term consolidation. If the negative sentiment continues, we should expect a potential breakout below the 1.0729 level. A cup and handle formation has also been spotted in the euro forecast. If that pattern holds, we might be able to see the pair reaching levels around 1.0688. Finally, let's refine our analysis with the 15-minute chart. This allows us to see very short-term fluctuations and potential entry/exit points. We can see a very small downtrend is possible to make out in the current range. I'd be very careful trading with such a short time scale. Always know your risks. Looking at recent candles, we're seeing a struggle to break even 1.08, indicating immediate resistance. A short trade with a tight stop-loss above this level could be considered, keeping an eye on the 1.0729 and 1.0688 price levels as potential targets. Conversely, a break above 1.0779 would negate the bearish thesis and potentially trigger a move towards the 1.08 area. To recap, key price levels to watch are 1.0779 resistance and 1.07372 support on the daily chart. A break below the support could lead to a test of parity, 1.0000, in the longer term, although this isn't our primary prediction, but a possibility. For short-term traders, monitor price action around 1.0785 resistance and 1.0762 support on the hourly chart. Given the current negative sentiment, a bearish bias seems appropriate, but remember to always use stop losses and manage your risk. Keep an eye on any news regarding U.S. tariffs, as this will continue to heavily influence the EURUSD pair. Remember to like and subscribe, and we'll see you next time on Explain the Charts. The most likely scenario is continued chop around the 1.07 to 1.08 range, 60% chance, with a break downwards to 1.065 possible if tariffs get more severe, and an upwards break if inflation calms down.